How to spot what smart money is doing. Warmest greeting from Ghost in the chart to all of you. Let me tell you a story. One that completely changed the way I see the market and might just change your life too. Back then, I stepped into trading with nothing but naive expectations. I thought learning enough indicators would be enough. I thought all I needed was to master RSI, martingale, Bollinger Bands, moving averages, Fibonacci, and the Ichimoku cloud. I believed the market was a game of decoding signals. Whoever understood the formulas best would win. But I couldn't have been more wrong. I once lost over 30% of my first account in just a few weeks. Not because I didn't study, I studied a lot. I stayed up every night until 2 or 3 a.m. reading books, watching videos, testing systems. I even bought a $999 course that promised to teach me how to beat the market. But the market doesn't make promises. It simply dropped a long red candle like a blade, slicing through my trading dreams without a single warning. I didn't lose because I lacked knowledge. I lost because I was looking at the wrong thing. That was when I decided to pause and return to my hometown for a break. And that's when I met him, the man I call the forest watchman of the market. He lived in seclusion on the outskirts of the city. No social media, no private groups, no flashy P&L, no courses. But those who had traded long enough knew him as a classic player, silent, disciplined, and terrifyingly precise. I was introduced to him by an older mentor. The first time we met, I asked, "What indicator do you use to confirm your entries?" He gave a faint smile and pointed to the chart on his dusty old screen. Nothing but candles and volume. Then he looked at me and asked, "Do you know who actually draws these candles?" I hesitated, unable to answer. He continued, "Volume isn't an indicator. Only real money can draw real candles. Indicators tell you the past. Volume is the only thing that whispers the present." I said nothing. Then he handed me a piece of paper with 3 words written in bold red ink. "Money fears greed. Indicators won't tell you who's afraid. Indicators won't say when the sharks are accumulating. Only volume can reveal that." From that day forward, I followed him. Not like a student taking notes, but simply observing, watching him work, watching how he looked at the chart as if it were a river changing its current. He didn't trade every day. Sometimes, he went an entire week without a single order. "Not because I'm afraid," he said, "but because the sharks haven't arrived." He taught me that volume is blood, value is skin, and indicators are just makeup trying to hide the bleeding. He said when volume increases, but price stays flat, that's where the trap is laid. When volume decreases, but price is still being pushed, it means the sharks are quietly leaving. I started letting go of indicators. No more RSI, no more divergence signals, just a bare chart and volume. I remember once when gold broke through a 6-month resistance. A perfect breakout by every technical indicator. But he didn't enter. He just said, "Volume didn't rise." That's not real money. That's a performance. And just as he predicted, within an hour, the price collapsed. I asked how he knew. He smiled and said, "Only the sharks have enough money to move the price far. If volume doesn't increase, it means they're staying out. And if they're out, so am I." That was the moment I began seeing the market differently. A sudden spike in volume in a sideways zone. Someone's creating liquidity. Low volume with steady price increases. Silent money is pushing. Large volume with a small red candle. Someone's unloading without leaving a trace. I no longer needed to be right every day. I only needed to be right once when volume showed that the sharks had entered. I realized indicators are remnants of the past. Volume is the heartbeat of the present and sometimes the first whisper of the future. If you're trading with dozens of indicators, if you're lost between RSI, EMAs, SMA 100, stop. Look at volume. Ask yourself, who's buying here? Who's selling? Where is the real money going? Because the market doesn't run on logic. It runs on money flow, and only volume tells the truth. That was the first lesson, and it became the door that led me out of the darkness. A door opened not by words, but by a single glance from a silent teacher. Ghost in the chart bows in gratitude to all the brothers and sisters who have quietly listened, silently supported, and patiently walked alongside this channel. These stories of stumbles and the lessons burned into my memory from my teacher would have remained fragments if not for you. You, the one listening. The one who breathes with every beat of the market, who resonates with each tremble of conviction, who walks each step with me. Every video I create is not just content, it's a small gift I've wrapped with all the respect I have for you, my true companion. Thank you for believing in this journey. Thank you for staying. And thank you for still being here. I've seen many people step into the market with eyes full of light. They believe that studying enough indicators, mastering techniques, and managing emotions would guarantee success. They were serious, not gamblers, but today, they're no longer in the market. Not because they weren't smart, but because they couldn't see the one thing that truly drives this entire game: volume, the living flow of money. I remember Ann, my closest friend during those early years. He was brilliant, seriously brilliant. He could code trading bots, backtest hundreds of systems. He had an entire library of patterns from Wyckoff to harmonics, from price action to Elliott waves. We used to debate for hours about combining RSI with MAMA and Bollinger Bands. But there was one thing and always ignored. And it's the same thing that took him out of the market forever: volume. I still remember that day clearly. Gold was hovering around its all-time high. The news was all positive, interest rates steady, political climate stable. Everyone predicted gold would keep rising, and placed a massive long order. Every indicator agreed. RSI breakout, MACD bullish divergence, MA20 crossing MA50. Even the H for candle closed like it was pulled from a textbook. But one thing didn't agree: volume. It suddenly dropped right when price was breaking out. It hit the lowest level in 7 days. I called Ann and said, "Hey, this volume looks strange. I think it's a fake breakout." He laughed. "You're always skeptical. Trust the model. Trust the data. The sharks wouldn't pull anything here." And then, just 2 hours later, the market crashed. A long red candle like a gunshot in the night. And cut his losses, but his account was nearly wiped out. He said nothing, just quietly uninstalled all his trading apps and never returned. I once asked my teacher, why do even the most technically skilled traders still lose? He quietly poured tea and said, because they see the market as geometry. They believe in patterns, in crossovers, in backtests. But the market isn't mathematics. It's a battlefield of money and fear. And only volume draws the war map. Then there was Kai, a man with iron discipline. He never overheld, never broke his rules. But he died because of something most traders never pay attention to: liquidity. That day, USDJPY had been sideways for nearly 2 weeks. Everyone waited for a breakout. Kai had set a buy stop order. The news came. The breakout happened. Price surged. But minutes later, it snapped back down, hit his stop loss, then bounced up again. Angry, He re-entered this time, doubling his size. The price moved in his favor, but then volume suddenly spiked abnormally and reversed sharply. I looked at the chart and said, "Trap, high volume." But the price didn't create a new high. That was a sign. The sharks were offloading, not truly buying. That trade nearly wiped out Kai's entire account. He quit for a year. And when he returned, he only traded tiny positions like someone deeply scarred. The market doesn't kill people. It's the illusion inside us that ends us. The market doesn't need strength. Sometimes, all it takes is a slight twist in volume at the right moment to lead millions of traders straight into a trap. I've seen brilliant people disappear not because they were foolish, but because they believed more in the precision of tools than the nature of money flow. They measured RSI but not the greed of the big players. They counted Elliott waves but ignored the volume screaming beneath. My teacher once said, "Volume is the voice, price is the image." If you only see the image without hearing the voice, you'll be fooled sooner or later. I don't share this to scare you. I share it to awaken you. Trading is a game of survival. It's not for those who believe they're smart enough to predict the right direction. This is for those who listen to what the market is actually saying, not what they wish to hear. If you've ever lost money on a perfect breakout or got trapped by flawless technical signals, then let me ask you, did you ever look at the volume at that moment? Did you notice it staying eerily quiet or screaming in vain? Some people never return to the market. Not because the market is too cruel, but because no one ever taught them that volume is the heartbeat of the chart. Volume is not just data, it's a trail. A trace of the one who stepped into the battlefield before you could even see him. That was the first thing my mentor told me in what he called the anatomy of the market through the flow of money. No blackboard, no slides, just a bare candlestick chart with volume sitting quietly below like an underground river rushing beneath a still lake. He never drew patterns. He broke volume into three core movements that he called the three market layers. The first layer, liquidity building volume. This is the first mask. Sharks never rush. They create sideways zones like calm lakes before a storm. He pointed to a stretch of gold price moving flat, 17 candles in a tight range. Volume wasn't high, but consistently steady. Occasionally, a slight spike, not enough to move price, just enough to mislead. He said when sharks want to buy in large amounts, they can't do it in one go. They need sellers, they need retail volume. So they nurse the zone, create liquidity through news, through soft stop hunts, then repeat it until they gather enough. Price hasn't moved yet, but volume already whispers someone is accumulating. The second layer is shakeout volume. Not every drop is a real dump. Sometimes it's a purge. Push price down to scare retail into panic selling, then scoop everything up. He showed me a Bitcoin chart. 3 consecutive H1 red candles, volume surged. Then suddenly the market reversed, shooting up 5 green candles in a row. He tapped the screen and said, "This is a shakeout." Retail was panicking and selling, but volume said otherwise. If it were real panic selling, price would have kept falling. But instead, it stopped, reversed, and kept going. I asked, "How do you know it's accumulation, not distribution?" He smiled and said, if the sharks were selling, they wouldn't let price bounce back that fast. But if they're buying, they need retail to sell quickly, so they don't have to pay higher. When volume surges and price bounces sharply, the invisible hand is quietly loading up. The third layer is true attack volume. This is when war begins. No more acting, no more bluffing. This is the moment when sharks make their final move, flinging the door open and firing the first real bullet. He pointed to a real breakout zone. Price broke through accumulation, volume rising steadily, not in a single spike, but over 3-2 for candles. Every retest had healthy volume, no wicks, no hesitation. This was real, not a probe, not a tease. I asked him, "So when do you enter?" He replied, "When 2 out of these 3 layers show up consecutively and volume doesn't betray you. Not earlier, not later. Only when all the masks are stripped away can you see the true face of the market." That's when I learned to act like a sniper. I don't enter when the market looks beautiful. I enter when volume reveals who's really holding the gun. I wait through long sideways zones when everyone else is bored and leaving. I wait for sudden shakeouts when retail panics and dumps. I wait for volume to awaken, not with noise, but with a steady, powerful, and precise rhythm. Then I pull the trigger, slow but certain. 1 trade a week maybe, but never in the wrong direction. My mentor taught me to read the market not with my eyes, but with my senses. The senses of someone who's been stabbed in the back too many times, until they learn to hear footsteps behind the candle. You can trade with 10 tools, memorize hundreds of patterns, but if you can't read volume, you're fighting in the dark. Because price can lie, news can be staged, but volume always leaves a trace of blood. There's one thing my mentor always emphasized: volume isn't just data. It's a conversation between the one who knows exactly what they're doing and the crowd that has no idea it's about to drown. When I was still inexperienced, I used to think of volume as just a support indicator, a chart sitting underneath the real action. Later, I realized it's beneath not because it's secondary, but because it's the foundation. Like blood, it's not the first thing you see, but it's what keeps everything alive. My mentor once told me, "Don't look at the market like a flat sheet of paper. See it as a dark room full of people. The winner isn't the loudest, but the one who moves at the right moment." I asked him, "How do you know when to move?" He pointed at volume. "This is the sound of footsteps. Listen, it never comes alone." Since I started focusing on volume, I'm no longer swayed by the beauty of candlestick patterns. A pin bar at the bottom no longer confuses me. A breakout from the EMA doesn't excite me. I learned to ask myself just one question before every entry. Who is putting real money into this right now? Without money flow, every pattern is meaningless. Without volume, every breakout is just stage magic. My mentor taught me one rule that I carved into the edge of my desk. Price is the actor, volume is the script. If you want to know whether the show is real or a con, read the script, don't just watch the performance. Some days, I would sit and watch the chart for 7 straight hours without taking a trade, just waiting for a zone to be cleaned. What does cleaning mean? It means the sharks must first make retail traders bored, drained, disillusioned, or overly greedy, and only then do they strike. That's when volume begins to change in quality. It no longer moves meaninglessly. It forms patterns, rhythms, and signals. Like hearing the rush of water from afar and knowing the flood is coming. You don't need to see it, you just need to feel it. I also learned to recognize dirty volume. There are days when volume spikes abnormally high without matching price movement. I don't rush, because my mentor taught me that volume without motion means the deck is being shuffled. Price without volume means the scene is being staged. I learned to distinguish between real attack volume and marketing volume. And then I came to a bitter truth. Most traders don't lose because they don't study enough. They lose because they enter while the sharks are still asleep, or worse, while the sharks are setting traps. In one rare moment, My mentor played back a video recording of one of his trades. He pointed to an H1 candle with slightly increased volume, just enough to cross the 3-day average. He said, "That candle looks like nothing to you, right? But the 16 candles before it had extremely low volume, so even a gentle push like that was the first knock on the door." I asked, "So when did you enter?" He replied, "When the next candle wasn't a breakout but a perfect technical wick. I never enter when the price is beautiful. I enter when people are full of doubt." That was the difference. Most traders enter when everything is clear. My mentor enters when volume speaks the truth while price still wears a mask. I once recorded a full day's trading journal using nothing but volume. No indicators on the chart, just numbers and zones. But I felt like I could hear the heartbeat of the market. No more confusion, no more FOMO, no more blind hope or vague fear. That's when I understood. Volume doesn't give you instant victory. It gives you the stillness to not die early. People often ask how pro traders enter a trade. What special setup do they use? What tools? What methods? What time frames? I used to ask those questions too, until I saw with my own eyes the final trade my mentor ever placed. And I understood. A true trader doesn't enter because they see a signal. They enter because they feel the flow of money has made its choice. That trade didn't happen in a grand setup. No news. No major waves. Nothing. Just a silence stretching like the space between two breaths. It was day 14. I remember clearly because every morning at exactly 6:30, he would open his chart and just stare, never touching the mouse. On the 14th morning, he called me over and pointed to the oldest chart. The market's been too quiet. Retail has given up. The sharks are full. I looked at the price moving sideways in a tight range for more than a week. Volume was initially low, then slowly ticking up, not spiking, but steady like a calm heartbeat. I asked, "Is this accumulation?" He nodded. "Yes, but not complete. One more shakeout is needed. One last drop to force the weak hands to let go." 3 hours later, the shakeout happened. A long red candle pierced through the sideways zone. Volume surged. The average trader would think to sell, but he smiled. Sharks don't make noise like that to sell. They're not dumping, they're clearing the runway. 30 minutes later, the next candle appeared. A perfect reverse pin bar with high volume, yet price didn't fall any further. I looked at him. He had already placed a buy-stop order just above the high of that pin bar. I asked, "Why didn't you wait for confirmation?" He said, "I don't need confirmation. Volume already told me that price was just trying to fool anyone who still doubted." The order was triggered, price shot up, and within 15 minutes, his account grew over 6%. He closed the trade. I was stunned. What if it kept going? He took a sip of tea and smiled. "I don't need more. I just need what's right and enough. The rest is for the greedy." After that trade, he shut the laptop and walked me out of the room. We took a quiet stroll uphill, through a tranquil green tea field. He asked, "Do you know why most people die in the market?" I said nothing. He continued, "Because they think they have to fight every day. They think trading is constant action. But in reality, the winners are the ones who know how to wait, and only act when everything is in place, when the script is clear, when volume no longer contradicts price." I never forgot that moment, a trade that lasted 1 minute, but was the result of 14 days of silence, observation, recording, and patience carved in stone. I realized that survival trades don't come from advanced techniques. They come from a deeper understanding of the market than the majority and a longer endurance than the rest. Volume never shouts. It only hints, and only those who are still enough can hear it. And my old mentor was not a genius. He was simply the last man patient in a market where everyone else was in a rush. There were things he never explicitly taught, not because he wanted to hide them, but because he believed if you are calm enough, you'll understand them yourself. But if you're in a hurry, even if he tells you, you won't hear a thing. It took me years of losses, overconfidence, and disappointment to finally understand. He didn't trade to get rich. He traded so he would never be poor again. The market always talks about big wins, about people doubling, quintupling, or multiplying their accounts tenfold in weeks. But in 25 years, my mentor never let his account drop more than 3% in any given month. He never bragged about how much he made. He only said, "I'm still here. I'm still alive, which means I haven't been swallowed." His invincibility didn't come from never losing. It came from how he thought about survival in the market. I once asked, "Aren't you ever afraid the market will reverse on you?" He said, "Of course, I'm always afraid, but because I'm afraid, I never gamble. I wait, I watch, I probe using volume. If volume isn't on my side, then I'm not on the side of price." His mindset of invincibility came from extreme simplicity. A blank chart, one main time frame, one strategy. Read volume to detect when the sharks strike. No overlapping indicators, no guessing tops or bottoms, no playing prediction games, and above all, he never saw trading as a primary income source. I remember one afternoon sitting beside the porch as he said, "Trading is not a money-making job. It's a money-keeping profession. I don't trade to get rich. I trade so I don't lose what I've preserved from before." That's why he didn't trade every day, didn't expect to live off winning trades, never traded when his mind was unstable, and absolutely never tried to recover losses out of revenge. He lived on other assets, real estate, forest land, passive income. Trading was where he waited for the right moment, like a marksman. I once asked, "Don't you fear missing out?" "There are so many beautiful waves in the market." He just looked at me and said, "Opportunities aren't rare, but people patient enough to wait for the right timing are." The biggest trap in the market isn't a losing trade. It's the urge to jump back in right after. That's when you lose everything. I remember someone once asked him, "Do you ever think you could be wrong?" "Volume can be misleading, right?" he answered softly. "Volume can be noisy, but it can't be hidden. People can fake price, candles, news, but real trading volume always leaves a trace. The question is, have you looked long enough to see it?" His mindset of invincibility, if I had to sum it into words, would be these 5 principles I engraved in my heart. 1. Never trade without understanding the money flow script. 2. Never enter if volume doesn't confirm. 3. Never expect to get rich from trading. Only use trading to accumulate when the market gives clear signs. 4. Never let emotion decide action. 5. Never take the side of price if volume takes the other. Someone once asked me, "What's your mentor's greatest strength?" I didn't say his market vision. I didn't say his volume reading skills. I said this: he doesn't need to win every day, but he's never left the market. And I believe that is the true peak, not the peak of wealth, but the peak of existence. Trading is not for those who want quick wins. It's for those who know they're walking into a forest where every movement could be a trap. And only those who stop at the right moment, move at the right time, and stay still when needed can make it out of the forest alive. My mentor is now retired. He no longer trades. Each morning he brews tea and opens his charts, not to trade, but to watch the market continue doing what it always does. The strong money wins, the weak money dies. And volume is still the only trace that separates predator from prey. I still remember the last thing he told me before stepping away from the trading desk. You can make money from the market. But if you don't understand how money flows, the market will take it all back, and next time, it won't let you return. Remember, no indicator can save you, but volume might. Ghost in the chart bows with gratitude. Thank you for walking this journey with me. In this trap-filled world of trading, your presence gives meaning to every story. If you found value in this video, please like, comment, subscribe, and share with those who need a path. I'm Ghost in the Chart, and I'll always be here, not to make you better, but to help you understand more.